I'm 680 News Senior Business Editor Mike Eppel. Today was a holiday, a nice respite for the Canadian markets for Victoria Day, so we didn't have to worry too much about what was going on global affairs on the U.S. China trade front. Wall Street, though, was in business today. And as we've seen over several weeks now, U.S. China trade relations have taken the markets all over the map. Lots of volatility, so we'll see how it played out on Wall Street today and then the subsequent reaction tomorrow on the TSX. Most recently, we have had a spotlight on, well, the aviation industry. We saw those big deals announced just last week on the buyout of Air Transat by Air Canada, that tentative deal valued at $500 million, and WestJet agreeing to a $5 billion buyout from Onex Corporation. We'll see more market reaction to that over the course of the next several weeks as Air Canada looks to finalize its deal with Transat and whether or not there's any pushback from the Competition Bureau on the consolidation in the Canadian aviation space. Big week coming up for bank stocks and investors. If you've got an RRSP in Canadian mutual funds, you've got bank stocks in there, and the big Canadian banks kick off the quarterly earnings season this week. We'll hear from the likes of the CIBC and the Royal Bank. And the big focus, what are the banks doing in their mortgage sales? As the Canadian housing market has shown some signs of moderation to start the year. We've got the new mortgage stress tests in place, so that'll weigh perhaps on the bank's earnings in the latest quarter. And, of course, many of these are now international businesses, so we'll see exactly how their U.S. operations are doing as well. Well, Uber had quite the first full week of trade on Wall Street. Lots of volatility for these so-called unicorn companies they've been dubbed. Companies that don't have any prospects for earnings, but they're all going to the market this year in the tech space. Uber and Lyft showing some, well, caution for investors in their early stage trading. Uber is still down from its IPO price of $45 per share. Lyft is about 20% below its peak when it debuted about 6 weeks back. And Beyond Meat has been quite the story. The protein-based meat substitute company went public just over a week ago. It has now tripled in value. We'll see if there is more purchases, taste for Beyond Meat shares over the course of the coming days on Wall Street. From the 680 Newsroom, I'm Mike Eppel for City News.